very good evening to all our viewers. Welcome to WION Wallet. I'm Sumit Chaturvedi. Let's see what is making new headlines in the world of business today. Mahindra stops the sale of its electric car in UK. Lack of sales to be blamed. The E2O sales are stopped. Indian Cabinet has cleared resolution package that includes an ordinance to empower Reserve Bank of India to more effectively deal with bad assets. In a major push to make in India, India's cabinet approves proposal of using locally produced steel in government infrastructure projects. And messaging app WhatsApp suffers a massive global outage. Millions of users unable to access the service in parts of India, Canada, US and Brazil. And now to our first global news, where electric car maker Tesla has said its losses had widened in the first quarter, but sales and revenues had grown rapidly as company prepared for critical launch of mass market model. The company said it lost $397 million in the quarter compared with a loss of $282 million in the same period a year earlier. But the automaker emphasized that production had increased by about 65% from last year's first quarter to 25,000 vehicles, and the revenue had more than doubled to $2.7 billion. While the figure includes revenue from Solar City, the solar panel maker that Tesla merged with last year. Now, automotive revenue alone was $2.3 billion. The gains on the production side are being watched closely by investors and analysts who are seeking evidence that Tesla can meet its plans to begin manufacturing the Model 3, its first mass market offering this summer. And coming to social media, where Facebook had another strong quarter, beating estimates to start 2017. It scored $8.03 billion in revenue and 1.04 earning per share in quarter one compared to $0.87 earning per share estimate. Now, it earned that from 1.94 billion users, up from 1.86 billion last quarter, growing at a faster 4.3% compared to 3.9% last quarter. While fake news, video, violence and copying Snapchat have all been fixtures of the Facebook news cycle, its user growth actually grew during the time period. Now, Facebook added 3 million monthly users in the lucrative but saturated US and Canada market, though the Asia-Pacific region was the big driver, where Facebook added 43 million users. Now, staying with social media, where WhatsApp, the online messaging service, went offline yesterday evening, leaving millions of users worldwide in turmoil. The Facebook-owned service went down at around 9 p.m., affecting users in UK, US, Australia and Brazil, among other countries. It returned at around 11:20 p.m. It was unclear what caused the issues with hugely popular online messaging service. A spokesman for WhatsApp said some people have had trouble accessing WhatsApp for a short period today. WhatsApp, which is reportedly planning a major update, did not comment on the cause of problem. But complaints posted on social media quickly made the service the top trend in the UK on Twitter. Many users reported being able to open the app but not able to connect to its servers, making it impossible to send or receive messages. Now to biggest Indian story, where Indian Cabinet yesterday has cleared the non-performing assets or NPA resolution package that includes an ordinance to empower the Reserve Bank of India to more effectively deal with bad assets. Now, this move will kick off a long-awaited initiative aimed at cleaning up balance sheets of banks burdened with bad debt. Take a look at this story.
Finally, a government roadmap to help banks drive out of non-performance assets. The Cabinet has approved the promulgation of an ordinance to amend the Banking Regulation Act for resolution of the crisis of non-performing assets facing public sector banks. Public sector banks in India are saddled with bad loans to the tune of a staggering 6 lakh crore rupees. As per latest government data, the gross bad loans of public sector banks rose by over 1 lakh crore rupees in the first 9 months of the last fiscal year. The government has proposed an ordinance to amend the Banking Regulation Act, which will empower the Reserve Bank to deal much more effectively with stressed assets. Changes are being made to Section 35A of the Banking Regulation Act, as also certain provisions of the Bankruptcy Code. These changes will empower the RBI to give directions to banks to effectively resolve NPAs or non-performing assets. The rework law will also empower the RBI to set up oversight committees that will shield bankers from any subsequent action by investigative agencies looking into loan recasts. Efforts over the past few years to resolve the bad loans issue have met with limited success, prompting the government to push for a more effective plan. Bureau Report, WION.
Now, to join more on this issue, we are joined by Professor Krishnamurthy Subramaniam, Member of Board of Directors at Bandhan Bank. Now, good evening, Mr. Subramaniam. We would like to first of all ask you how effective you think this particular step would be to tackle the bad loan mess.
Thanks first for having me on the show. I think this measure has been long overdue. The reason being that the public sector banks have been dragging their feet on resolving these non-performing assets. The incentives in the public sector banks are such that each chairman just kicks the can down the road to the next chairman. Typically, their tenures are not long enough for them to have the incentives to, finish the problem, to take the problem head on. Secondly, the ARC, the asset restructuring companies, selling to those has not happened because the public sector banks actually are not willing to take the hit on these loans, because many of these loans, for a value of face value of 100, the market value of these loans would be significantly lower, and at that lower market value, the P&L of the banks, the financial statements of the banks, will take a significant hit, which no public sector bank chairman has had the courage to implement. Therefore, given these problems, there was a need for an emergency measure to try and resolve this distress. The Deputy Governor of the Reserve Bank of India, Dr. Viral Acharya, had spoken about this in a recent bankers conference as well, about the need for taking this problem head on, because what we could have is, if the NPA problem is not resolved, we could have a lost decade, because realize that the banking sector is the heart of the economy, and if the banking sector does not grow at 17-18%, the assets do not grow at 17-18% in nominal terms, we are not going to be able to achieve GDP growth of close to 8 or 9%. Currently the banking sector has been choked, and there are systemic problems which actually needed to be addressed. In particular, what is, I think, particularly noteworthy is the fact that the oversight committee can ensure that there is no ex-post examination of these problems, because one of the reasons that there's been a fear psychosis is that if the public sector banks renegotiate the loan amounts, allegations of corruption and collusion can be made on them. Anticipating such difficulties, the public sector banks have had no incentive, particularly the senior management, has had no incentive to move on these issues, and therefore I think resolving this particular problem, sort of some of this overbearing presence of the CBI and the CC and the pernicious consequences that result because of that, removing some of those pernicious influences, I think, is an excellent step. So this has been long overdue from the government. The RBI has been talking about this stuff, for a long time, even under Dr. Rajan. This was mentioned. In fact, the committee that I was part of, the Dr. P.J. Nayak committee, that the report of that, we had in 2-3 years back, we had called this problem, and this better late than never, but a step in the right direction.
Right, Mr. Subramaniam, thank you so much for talking to us and joining us on this crucial, important news. Now moving forward and staying with the black money, which is again a part of bad debts and bad loans somewhere or the other, a report by Global Financial Integrity documenting illicit financing flows across the world has pegged total illicit inflows in India between 2005 to 2014 at $770 billion. The yearly report titled Illicit Financial Flows from Developing Countries also pegs illicit money inflows in 2014 at $101 billion in the report. On the other hand, illicit outflows from India was pegged at $165 billion between 2005 and 2014. In 2014, the illicit money flowing outside India stood at $21 billion, a fifth of the outflows during the year. The report notes that most of the illicit inflows and outflows in India happened due to misinvoicing of exports and imports. Now to automotive market in India, where Indian scooter maker leader Honda has gone ahead of motorcycle specialists in India and homegrown Bajaj Auto to claim the second spot in domestic sales of motorcycles. Now, Honda Motorcycle and Scooters India clocked sales of 183,000 units in April against 161,000 units sold by Bajaj Auto during the same period. Now, Hero MotoCorp, Delhi headquartered two-wheeler giant, remains largest manufacturer of motorcycles in India. Bajaj Auto, the makers of Pulsar and Avenger, witnessed a drop of 19% in sales last month from around 200,000 units sold in same month last year. Now, to talk more on this issue, we are joined by none other than Honda's sales head and marketing head, Y.S. Guleria. Thank you for talking to us, Mr. Guleria, and thank you for joining on this edition of WION Wallet. First of all, how has been the new position? How have you achieved it? And how has that been possible for you?
Yeah, it is, I would say a fantabulous entry of Honda into the new financial year with great results, both in motorcycles as well as scooter for us. In fact, when we entered into the April month, that's the first month of the financial year 18, was with a very, very low stock, because we had, almost liquidated our BS3 stocks in the last week of March. Because of that, the Supreme Court ruling, there was no other way but to, have a plan to quickly liquidate our stock at the network. And having done it successfully, when we entered into the first month of April 2017, most of our network were basically, stock out from both scooters as well as for motorcycles. And then with the great support from our supply chain partners as well as our manufacturing team, we were quickly able to put our plans together and, successfully gave more vehicles to the market in both motorcycles and scooters. And there was a marriage season also on, and good demand for scooters as well. And that led to the wonderful results which we had in the closing of April.
Now, from number 2, do you aim to be the first, the largest two-wheeler player in India or in motorcycle market anytime soon? And if yes, how?
First of all, I'd like to mention here that yes, Honda is a global company, but in India operation, it is very much local. So because when I say local, we are using our expertise of experience and technology which we have globally, plus whatever we have gained as a market know-how, the in-depth knowledge of the customer psyche of the Indian market. So it is a perfect marriage of these two, and then we are giving our product offering as well as the services to our customers. So we very much know how the Indian market behaves and what are the expectations of the consumer, aspiration of the rising India. So accordingly, the entire game plan is being made. And moving forward, we have been building up our production capacities, because the response to our products have been great. And in fact, now in entire segment, 100 to 110 cc, then 125 cc, as well as 150 cc and above, the couple of new models which we launched from last 2 years onwards, they are doing very well. To name a few, Levo, and then Shine SP, and then CB Hornet in 150 cc plus. And at the same time, the continued growth momentum in the sales of automatic scooters in the country is acting as a tailwind for the good results of Honda. So we are very happy that today the largest selling tool in the country is not a motorcycle, it's a scooter, Activa. And Activa already crossed 1.45 crore customer base for its cumulative sales. So moving forward, yes, as a trend, what we foresee that automatic scooter will continue to lead the growth in the country. And to align with our more demand for scooters, we will be building a capacity. For example, now in our third factory in Karnataka, by July end, there will be another additional line for 6 lakh annual capacity, which will be coming into place. So from August onwards, you can expect higher volumes from Honda two-wheelers.
And last question to you would be, what is the overall situation as far as two-wheeler market is concerned? Help our viewers understand where do you stand now and where do the overall two-wheeler market stand now, as if we are talking from a layman's point of view to you.
First of all, the Indian market as a fundamental of the macroeconomic factors as well as the current two-wheeler penetration, we see the penetration of two-wheelers in the household is still comparatively lower than the other Asian countries like Thailand or Vietnam and all. So we are very confident that the sales of two-wheelers will continue to grow in the country. And today also, if we exclude the electric bikes, then it is already the world's largest two-wheeler industry. And even for Honda global two-wheeler operations, Honda Two-Wheelers India is now the largest operation, both in terms of production as well as in terms of sales. Now, last year, the two-wheeler industry has grown by 7%. That was including domestic, in the domestic market, and including exports, 5% growth has happened. So the growth is happening, but unfortunately, the percentage growth has slowed down post demonetization. But I would not, like to go in past. We have to move on and move forward. So this growth, we again expect the conservative forecast is, and the industry may grow anywhere between 8 to 10%. So this growth will continue, and Honda will definitely play a much bigger role in the Indian two-wheeler market.
Now, staying with the auto space, Mahindra and Mahindra of India has stopped selling its electric car in the UK due to meager sales and is winding up operations there. Now, in a setback for Indian automakers' global ambitions, Mahindra's exit from UK comes less than a year after it launched E2O car in a market it considered a launch pad for selling electric cars in Europe, especially to countries like Norway, Sweden, Netherlands. The Indian EV market or electric vehicle markets is poised for a takeoff, and given that scenario, we are primarily focusing on the Indian market. Well, that said Mahindra and Mahindra. Also, it said that it will reconsider UK market at an opportune time. Now, India's cabinet has approved a proposal to make the use of local steel mandatory for government's infrastructure projects aimed at boosting sales of local companies. The ministry's flagship national steel policy, which seeks to outline a roadmap to increase the country's annual steel production to 300 million tons by 2025, was also passed by cabinet yesterday. The policy is broadly seen as continuation of India's protectionist stance against countries such as China and Russia. It also comes in the backdrop of a trade probe launched by US President Donald Trump against cheap imports into the United States, in a move that could aggravate trade friction among global producers. Now, India wants to nearly triple its production capacity by next decade and acquire technology to produce higher value products, including automotive steel. The government policy will also provide a guiding light for Indian steel companies that are seeking to expand while saddled with huge debts. Now back to global news, where US Federal Reserve has kept its interest rates unchanged. US Federal Reserve said it has decided to keep interest rates in the range of 0.75 to 1%. Decision was taken after a two-day policy meet. Central bank last raised its rates in March and December, given steady job creation and some signs of mounting price pressures, and amid the wave of optimism in the early days of President Donald Trump's term. Now, with his promises of tax cut and big infrastructure spending. Now, for the 3 months to the end of March, The US GDP grew at an annual rate of 0.7% in the first quarter, the slowest rate since first quarter of 2014. Now with this, it is time for a short break on WION Wallet. After the break, we will continue with our coverage of markets. Stay tuned to WION. Welcome back to WION Wallet after the break. Now straight to our market segment, where Indian markets have continued their upward journey today. Sensex was up by 230 points, while Nifty was also up by around 47 points. That's a big jump for Indian markets. Sensex for this last some days has maintained its positive momentum and has been upwards to the upwards of 30,000 mark. Today, Sensex closed at 30,126 points, while Nifty closed at 9,359 points with a gain of 47 points. We can say that 48 points. Though Asian markets, on the other hand, were trading in mix today. Overall, the Fed rates unchanged. That was on the expected lines. That's why markets did not react on that account throughout the globe. But Indian markets are on an uphill drive. We are in a bull market. That's what all are saying, all investors, analysts, everybody is saying we are in the bull market phase. That's why every day market is gaining 100 points. That's been happening from the last many days together now. We are joined by our Now to talk more on this issue, we are joined by our guest for today, Lavlesh Sharma from Indore. Well, good evening, Mr. Sharma. First of all, we would like to know from your side, why are markets going up and up? And will we continue to see that over the next few days also? Are we in a continuous bull 2.0 phase?
Yeah, briefly that, why are we going up? Well, first is the liquidity. We have seen a lot of liquidity coming in, especially the day the demonetization has been announced. Post November 8, we have seen a lot of liquidity that is coming into the market. RBI stance has been clear. They want to contain the inflation at around 4%. But since the type of liquidity we have seen, not just, on the domestic front, but in the global front as well. I mean, if you look at the FII data, that has been into the billions, and that too in last couple of months. So this much amount of money that has been coming into the market in say 2 or 3 odd months. So that is what taking markets, on a higher trajectory. Now, as far as how long it will go and what are other factors, well, there are many factors. We have seen some of the banks reporting good earnings, though there has been some, here and there in terms of slippages, but we are seeing quite good earnings in the current season as well. Apart from that, we have seen, some kind of a dips, almost of 1.5% utilized by traders. So this is one of the secular bull trend, and any dip here has been, opportunity for entering into the long-term trend, where we are seeing a bullish rally in almost 2017, complete 2017.
So in that kind of scenario, Mr. Sharma, what would you recommend an investor who has missed the buzz or who would like to enter the market now? What all sectors would you recommend are still good to go, still good to enter as far as the overall Indian markets are concerned?
Well, overall Indian market, and if I like to link it with the global market, I see a lot of upside potential. That too in specifically banking space, which is based on domestic scenario. We have seen a lot of undervalued banks coming out of breakout. You look at Bank of India, Canara Bank, or Federal Bank. Now these banks have been rallying almost 10 to 15 odd % in a day. You don't see that kind of a rally based on some kind of news. I think that is one of the things you can spot on the market when there is a lot of institutional buying that has been coming in, be it in form of FII or DII. So that's kind of a data and the numbers we look into the market. So first is of course banking, especially in that PSU banks, some of the top private banks such as ICICI, Axis, they are yet to perform. We have seen a good movement in metal or be it other space, but we haven't seen that kind of a movement in banking. So it's just picking up with the market. I think even if someone has missed the overall trade, I think PSU banks provide a good opportunity. Mixed with that, some can add infrastructure and construction space to the portfolio.
Mr. Sharma, a last quick question to you would be, yesterday Indian government took two decisions in the cabinet. First was on NPA, the second was on steel. Quickly tell us, how will it impact the stocks, banking and steel going forward?
Well, it will definitely impact the stocks that are presenting the metals and steel sector. We have already recommended some of the steel stocks to investors and traders. I'd like to reiterate again that metals are initially in a first point of their bull rally. So any dip in metal space, specifically with that policy coming in where we have to use local, producers steel. So SAIL, Steel Authority of India, NALCO, Hindustan Zinc, these are some of the stocks you should be looking at. Coupled with banking, of course, I would recommend and reiterate that metal space is one of the favored. And with global markets, $500 billion by Donald Trump, $300 billion dollar plan and road belt project by China. So
Fine.
that's all
Right.
working well for metal space.
Right, Mr. Sharma. All right, Mr. Sharma, thanks for talking to us and giving us details to us. With this, it is time to wrap this edition of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.